Crypto Space. We are live on Tuesday, 11:29 a.m., October 13th, the year 2020. Is it still frickin' 2020? My goodness gracious. Today's title is the binary stimulus bet. Risk on, risk off. I don't know. Seemed like a good title because that's all everyone seems to talk about is are they gonna stimulus? Are they gonna stimulate? As I feel like I'm 65 and I'm going to the doctor for a prostate exam. Are they gonna stimulate? Motherfuckers. That's a horrible segue into today's sponsor is Change Angel, non-custodial swap exchange. Stop depositing your shit on exchanges, not your keys, not your crypto. Put something in, get something out. Trade. That's the way we do things, boys and girls. That's what we talk about on Noah Talks. Who's in the house today? We got Stelios in the house, Kel's in the house, Pete's in the house, Nathan, my man. Hey, KJ, what's up, brother? Good to see you. Thank you for joining. All right, we got some good questions, actually. Stelios is talking about non-US dollar peg crypto. So here's the deal. And I saw this before I started the stream. Yeah, there's plenty of non-US dollar peg crypto, and you're going to get some serious returns on Celsius, about 15.8%. Pounds, Australian dollars, Hong Kong dollars, and Canadian dollars. And True offers those types of assets. But here's the deal: if there's a deflationary implosion and they don't print, like MMT style printing, and they don't really print enough U.S. dollars to cater to the quantity of U.S. dollar demand globally, it's going to destroy every fiat currency around the planet. So this is what's happening right now in the financial system is like a supernova explosion. It just really, really slow. We see and we understand what's playing out, but it just takes such a long amount of time because there's so much money involved, so many people, multitudes of countries. It's a global financial system. So it's like trying to talk about a supernova explosion day by day when it takes, a long time for these types of sophisticated processes to play out, astrophysical terms, relatively speaking. So if the U.S. dollar deflates, which is the natural tendency because of all the debt that's out there, as the debt implodes and the debt isn't being paid, that causes a deflationary event. You're going to destroy the other fiat around the world. The only way to compensate for this is for the U.S. to massively inflate the monetary supply. And that's what they've been doing with them too, but it's not enough. There's a quadrillion dollars worth of debt just in derivatives, and then you get into the euro dollar system, as George Gammon so eloquently explains. It could be potentially a couple of quadrillion dollars. So the U.S. is probably going to need to print orders of magnitude more than they've already printed. They've only printed a couple hundred billion. So at the Treasury level, they printed probably, I think, it's less than a trillion. They've printed M1 supply of probably 500 billion. They leverage it 10 to 1 at the Fed, because that's basically the high-level way we could describe the way the system is working, where the system works, and they leverage the 500 billion to about 5 trillion. So they're probably going to have to print 5 trillion at the M1 level and double M1 supply. If you Google M1 monetary supply, you'll see there's probably about 5 trillion M1 monetary supply. Let's take a look. St. Louis Fed. I think there is only 5 trillion. See? Here's your great 2020 explosion. There was about $4 trillion, give or take, in the system. And oh wow, they did print a trillion. How do you like that? I underestimated what they did. Wow, they did print the trillion. Wow. So if they printed a trillion and the Fed usually takes that as about 10 to 1 leverage, it looks like there's about $10 trillion that have been put into the system. They don't talk about this. So here's the thing. What you guys hear on news media, you need to understand the data. The data tells the story. We don't hear the full story, and even if we did hear a story from news media, it's a story attempting to describe this very complicated, sophisticated system that the Federal Reserve, the Treasury, the U.S. government, Congress, and the President are doing. Now, how are they going to tell this story? You're going to hear some stupid story on headline news? No. Here, right here, this is the data, and you have to tell the story to yourself. They printed $1.5 trillion at the Fed. That's a $15 trillion chip. I bet you if you look at M2 money supply, M2 money stock, 15, 18. My God, 18. Look at this. Look at this chart. So the whole point is be very careful. And I don't trust these boys. I don't trust these people. These people. They're doing this, and it is high risk. They're playing with our lives. They're playing with our financial system, and it's dangerous because the general public does not understand this at all. Because I barely understand it, and the smartest people in the room attempt to understand it. Raoul Pal, Lynn Alden, Brent Johnson, Stephen Van Meter. Smartest people in the room are trying to understand it, and they have a much greater understanding than I could possibly have. But they just have ideas and thoughts about what may or may not play out, and what they do is they keep their ear to the pavement. They keep their ear to the ground, listening, looking at data, to see clues about what may or may not play out. And that's the way this whole thing's going on. And frankly, from my perspective, from my vantage point, it's just disturbing. I would love to see the smartest people in the room handling this type of complexity, this type of problem. And I know for a fact the smartest people in the room are not. Because if the smartest people in the room were handling this shit at the government level, we'd see some cool stuff. We'd see some innovation. We'd see some new things, some groundbreaking ideas. And that's the last thing we see out of the administration and out of the Congress. What we see is old people doing old people things the old people way. Slow. The same thing over and over again. Nothing new, nothing creative, nothing innovative. In fact, they spend a huge amount of effort attempting to fight innovation. What a ridiculous government fighting innovation. Everywhere it's just fighting innovation. Ridiculous. I'm gonna look over the comments. Who's in the stream? Sorry, guys. I rant and rave like an old man myself. Raul is super bullish on Bitcoin. Yeah, you're damn right. I'm super bullish. I think they were gonna overshoot the crap out of any of those. Any of the stock to flow, at least the original stock to flow prediction of $250,000. There's no reason I don't see we're going to hit 100,000 in a relatively short time frame. I mean, we're starting to see companies starting to flow in. Where is there was a nice chart put up this morning, and there's a lot of companies, but it's less than a million. About 600 and something thousand Bitcoin, I believe, are held by companies at this point. You're only talking about a couple of million Bitcoin available. At some point, if there's any systemic event, any systemic instability that causes companies and individuals to want to take their money out of the system, to not be part of this joke of a financial and political system, it's going to be the Bitcoin. You got to understand that. Everyone that joins my stream loves the altcoins, and I myself did very well this year trading altcoins. But the only thing that's even relatively or remotely pertinent to the legacy financial system is Bitcoin. It's part of the global macro narrative. So please, folks, it's not that I don't want a wonderful, incredibly democratic coin like Digibyte to change the world. It's not part of the narrative. It was birthed in 2014. It wasn't birthed in 2009. 2009, Bitcoin was created, unleashed, and has grown for 5 years before some of the more original projects like Digibyte. It's not about what I want. It's not about hopes. It's not about speculating. This is about what is actually occurring. and I invest and I trade and I prepare and I balance my portfolio based on what is actually occurring, not what I hope to be. Not what I speculate about the future. Maybe some coin without some project with that is missing smart contracts is going to change the game. Cardano. Listen, I love it and I want to invest in it when they get smart contracts and when they actually have TVL. That's when I will invest because I'm actually seeing what is going on. Invest and balance your portfolio based on what is actually going on and stop speculating on what may be. If you're speculating, you're taking risk. If you're taking risk, stop gambling. Risk is gambling. Stop gambling with your hard-earned damn money, ladies and gentlemen, and start structuring your portfolio like you worked for it because you did. Nathan, my man, not a sensei. Wax on, wax off. I'm with you on the 10 trill stimulus with Donna. 10 trill stimulus! Ah! Absolutely incredible. Absolutely incredible. He literally, the president is talking about printing money. I don't understand when everyone became okay with socialism. It's not. I don't even care about Democrats versus Republicans. I'm people versus government, and everyone in this country has been sucked up in this Republican versus Democrat thing. This whole liberal versus right wing and right wing conspiracy theories. I don't mind a good conspiracy theory, and I think a lot of them have good merit, and that's all it is a theory. There's no negative connotation to a conspiracy theory. And there's a lot of insanity going on, and the people saying particular behavior is either left wing and right wing, and what I have a problem with is radical behavior, whether someone is stable or acting crazy, or someone is rational or acting irrational. And that's what I enjoy. I enjoy logical, thoughtful behavior. So I have a problem with people that act radical. I don't have a problem with people that act normal. And there's plenty of people, Republican or Democrat, left, right, blue, green, red, that act normal. So I don't care who a person affiliates with. If you act normal, you're good with me. What the heck was my point? My point was it's us versus government. And I don't understand why that's not the narrative. It's kind of like politics as one, where the red folks, the Republicans have convinced all of these people to it's not a party. It's kind of like a group. It's kind of like a sporting event. And people forgot that it was people versus government. It doesn't matter whether you enjoy conservative. I'm very conservative. I'm fiscally conservative, extremely fiscally conservative. And I have a liberal interest as well. So nobody is one thing. I don't understand. I don't understand why people this whole liberal versus conservative. It's very confusing. Very confusing. I digress. I don't want to I don't want to bore the show. Sorry, guys. MetaMask swaps is bullish for Curve, of course. I mean, everything is bullish for Curve. Curve is basically the FX of the crypto space. Lewis is in the house. Always a pleasure, my man. My man. Uh, Revenue is decent. I think it's on track for about $300 a month for a dark node. Now, bear in mind, at these current prices, it was like 30 something, 35, $38,000 for a dark node. That's not the best ROI, but I got my dark node when it was $6,000 a dark node. So if I'm talking about $300 a month, that's $3,600 a year. That's a 2-year ROI for a dark node. That's pretty damn good. So what's happening is the dark nodes people are getting priced out of dark nodes, and you have to be a larger institutional grade investor or have that kind of capital so you can get a smaller ROI, smaller APR, return. If you get in, what am I getting? 50% a year at this point. $300 a month is 50% a year based on my cost basis. which is absolutely ridiculous. But if you have a $30,000 cost basis, it changes your ROI substantially, your yearly ROI. Angelo's in the house, always a pleasure. John Ross, would you rather have one Bitcoin or 32 ETH? It's the worst question in the world, man. You got to have both. You have to have one or the other. It's not a question that I can answer for people. People need to understand that Bitcoin fits into the global financial macro narrative. It's the only thing that companies are going to be investing in, using it as a treasury uh, asset to retain value in the face of monetary debasement, of which we're talking about double-digit percent value loss of your dollars. If you have dollars, you're losing your value in real time. You can literally open, you might as well go to your bank account and open it and watch the dollar value go down like a decreasing clock. That is literally what's going on, and so many people are okay with that. It's literally like a clock that's going down. $1,000, $9.99, $9.98, it's going down. You are losing money every second of every day, and everyone is complacent about it. Everyone's fighting this whole political bullshit when literally it's a war against people with bank accounts. Because a wealthy person doesn't have a fucking bank account. They have a tiny bank account, and the vast majority of their money is invested in stocks and bonds and treasuries and real estate and property and companies and assets and stock options. They don't keep money. The people who have dollars are suckers. Telling you guys, get your money out of dollars. Keep enough money to pay your bills, and you pay your bills with the money you make on a weekly basis or whatever your paycheck cycle is. You pay your bills with the money that you have coming in. But if you want to store value, if you want to protect value, if you want to grow value, if you want to do anything with value that, aside from lose it, you don't want to be the last person holding dollars. Robert Kiyosaki says, unfortunately, people holding dollars are losers. And I don't mean that in a derogatory sense, unfortunately. But a person that has $1,000 and then next year they have $900 because they lost 10% of their money to inflation is by definition a loser. It's not a derogatory thing to have lost, and there's nothing wrong with losing. What's pertinent is when you are losing, learn that you're fucking losing and figure out how to stop losing and start winning. Because it's not fair what's going on out there. And unfortunately, the vast majority of people in this country don't see me and don't have someone to tell them that they're fucking losing. And really, people need to be angry about this. And listen, I do relatively well. And I'm angry as fuck because so many people don't. And that's not fair, guys. It's really not fair. This government, this country has become not fair. If there is no path, literally the encouraged path of operation or encouraged behavior in this country is to work and attempt to accumulate dollars. And that is the worst possible course of action. So literally the American dream has become wrong, a fallacy. It's not possible. You need to be the American investor. And that requires skill and experience and conversation and debate and questions and answers. 32th, I don't know. I want both. I have both. That's the only thing I could say, brother. Adam, my man. Am I concerned about the high No, I'm not concerned about high transaction fees at all, because there's so much money out there that I was doing DeFi trading at $100 a transaction because I was moving around a $20,000 chip of cryptocurrency. Now the problem is this prices out and removes the little people from the possibility to participate in such a system. And that is disturbing and makes me angry, and it's unfortunate. So I'm personally not concerned about it, but I am concerned about it from a systemic viability perspective. Is this the best possible way for the system to work for everybody or the most people possible? Absolutely not. Are there solutions that are going to be implemented that make it financially reasonable for the small person to interact with these incredibly lucrative and powerful systems? Yes. There's L2 solutions, and no doubt F 2.0 is coming in the next couple of years. F 2.0 won't be fully live for at least 2 years. And of course, we have Polkadot, which is extremely scalable, incredibly cheap, and disruptive and transformative and functional and will revitalize smart contracts and interoperability. And the same thing with Cosmos and Cosmos Hubs. And Ren is going to bridge the gap between all of these chains. Oh, Ren and their multi-chain, absolutely incredible. Absolutely incredible, the large macro narrative for Ren. Jay Young in the house, always a pleasure. What did I miss? What did I miss? Igor's in the house. How much do you need to run a Syscoin node? I believe a Syscoin node. How much is a Syscoin node? I got that right here. Syscoin node is about 5 grand. 5 grand. That's the deal. Is what it is. Syscoin is a potential L2 solution for Ethereum, where you could offload transactions to Syscoin, but particularly transfers. I don't think they're ever going to get for arbitrary EVM execution, which is arbitrary Ethereum virtual machine smart contract execution, because clearly it's a side chain. So I don't know how they would do that. Um, that's really like the roll-ups, ZK or Optimism. Those are the arbitrary EVM L2 solutions. But Syscoin is a very powerful old school network. That's the Block Foundry. They're incorporated in Canada. It's a business that provides blockchain solutions to businesses. Syscoin is an absolutely incredible project. Now, bear in mind it's a bit speculative as compared to, like people hate on Curve, man. Man, Curve is probably one of the best investments in the crypto space. Why? You're talking about so many people investing in crypto assets that are speculative, what they may do, what kind of business solutions will they produce, what are their actual achievements other than speculative achievements. But Curve has $1.5 billion TVL, is doing almost $100 million a day in volume. That's actually tangible. That might be one of the most tangible productions, business productions, project achievements in the entire crypto space. Obviously, there's a bunch of AMMs. Clearly, Uniswap is doing substantially more volume as compared to Curve. But the point is, these are actually, as I always say, look at what is actually occurring, what is going on today. And that's what you base your choices and investments on, not what may be in the future. Sure, you can speculate on the future, and this is how you increase your risk. If you increase your risk, you increase your reward. But I advocate always to start a portfolio with minimized risk. Minimize all risk possible. And then as you get comfortable and start to understand how to balance parts of your portfolio and structure your portfolio to be strategic and crafty and calculated, you can take little parts of your portfolio and take risk with it. You can only, this goes back to like never go all in and never spread too thin. You got to have strategy. You got to be calculated with your portfolio. You can't take too much risk. Take too much risk, that's how you damage your value. That's how you lose money. You need to protect your goddamn money. You work too damn hard for it, ladies and gentlemen. Stop gambling. Ha! What's Ren's revenue per year right now? I believe it's about $3,600 a year right now. Right now, my man, Lewis. David, explain more about Celsius. Yeah, love me some Celsius, giving me 6% on 5 Bitcoin. Love Celsius. Celsius gives you yield. Celsius is over collateralized debt positions. It's the same thing as Aave and Compound and Maker in some regards, albeit Maker is a collateralized debt position. And they have their DAI token, which is basically a debt you owe They give you the die, but you owe in order to have access to your collateral. So point being, these are over collateralized debt positions. You're able to lend, and the best way to explain is if I give $1,000, Celsius will let me borrow, let's say $500. If I don't pay the interest, the agreed upon interest, whatever it may be, on my $500, Celsius is going to sell my shit. You understand, ladies and gentlemen? These are over collateralized debt positions. This is why folks are hating on Celsius. They don't understand how I am getting 6% of my Bitcoin because they're lending it to someone for 8%. That's why if they're lending it to someone for 8%, giving me 6%, and Celsius is taking a 2% cut, they got a fucking awesome business model. It's goddamn awesome. And guess what? If that person doesn't pay that 8%, they're going to sell their stuff. This is the genius business model. Over collateralized debt positions. You know what's stupid? A bank. They're going to give me $500,000 for a house, and I'm going to give them 2% down on the house? That's stupid. You know, the only thing more crazy is that the general public thinks that's normal, that's okay to take on debt and to not actually have the money to get the things that they want, and they think it's okay to borrow it, and that means you owe someone money. Owe someone money is a debt, and that's so goddamn close to slavery. It drives me nuts that it's so accepted in society to be an economic slave. Crazy shit. Jared says you use a crypto. No, I don't use a crypto card because it's really goddamn complicated. I don't know how to handle it from taxes. Everything is a taxable event. Everything. You literally, the government, the U.S., the IRS, can literally run an Ethereum crawler and all they have to do is somehow figure out how to tie a particular Ethereum address to you, which is pretty easy because I took money from let's say like Coinbase, and I sent it to one of my Ethereum addresses, and there's the connection right there. So, and then you have they'll come and audit you for five. They won't even audit you. They'll literally just send you a bill in the mail saying you owe this from the IRS because we calculated this based on your Ethereum transactions. So I don't know. Those debit cards are complicated until we have more clarity with regard to what is and what is not taxable from a cryptocurrency perspective. And in the U.S., it's an absolute tragedy. It is a tragedy. Hester Pierce, please help us. Well, that's at the SEC. Brian Brooks, please help us. That's at the comptroller of the currency. Folks in Congress, Tom Emmer, please help us. Is it fair? Is this fair? Can anyone possibly say it's fair what's going on and how not? It's not fair. It's not fair what we have to deal with. Trying to deal with money. Money's complicated. DigiLight, no on Twitter's a beast. I try my best. It keeps me occupied and it's exciting. Igor, my pleasure. What do you think about Syscoin and CBDC development? I think that'd be incredible. I think they're gonna go CBDCs because I don't see how they're not gonna go in full MMT, and I don't see any reason why we shouldn't all have Fed accounts and a Fed debit card, and the Fed gives us money, and there's overwhelmingly greater than zero possibility that we get a Fed account. The Fed gives us $1,000 a month, and we have 2 weeks to spend it. And this is how the government could force us to increase M2 velocity, of which right now M2 velocity is imploding. There's basically zero M2 velocity as compared dating back to like the 70s. If you pull up the M2 velocity chart, M2 velocity. So they need to get M2 velocity up because that's what the Federal Reserve does. They look at these freaking stupid charts, and M2 velocity is imploding. This means the economy is imploding. It's dying. The economy is dying, ladies and gentlemen. Everyone goes on out there like the printing's going to make a difference, and like the president's going to make it. No one gives a shit. This has nothing to do with who's the president. This has to do more with Congress and the Federal Reserve and the Treasury, and everyone goes through their day tied to this stupid election, these stupid politicians. That's what this chart says, guys. This chart says the fucking economy is dying, and everyone's dealing with this stupid election. Sidetracked with that's what it is. That's what it is. That's what this politics is. It's literally just giving someone a story to latch onto and to group people together and social order and social control to mask what's really going on with the society, with our country and our economy. It's dying. This is the movement of money, velocity of money, the velocity, how fast it's moving. And basically, there's no loans. No bank wants to issue a loan because everyone's losing their job and no one can pay it back, and people are underemployed. So there's risk in giving people loans. Frankly, the velocity. Look at this. This speaks for itself. It speaks for itself. Crazy. Anyway. You mentioned the funny thing is, Igor, you mentioned one word CBDC, and it created that entire monologue. If DeFi was on DigiByte, well, it can't be on DigiByte, my friend. DigiByte does not have Turing complete smart contract functionality. Now, bear in mind, Jared might say he wants to do something like that, but that would require a hard fork. And we know how hard it is to even do a soft fork, yet alone a hard fork. And I don't agree. What's the point of upgrading DigiByte to have solidity and Turing completeness when you could just use another blockchain like Ethereum as a sidechain? You could literally, especially with Ren. So what you do is you have your Digi assets, which is using basically as of right now, it's a centralized meta server, but we could also decentralize that, and that's kind of like a side chain in some regards. And you do smart contract execution on a tokenized representation of a Digi asset. And was it the ERC 677? Mints can have an arbitrary data payload. So Ren can mint an ER 677 from a Digi asset, execute the transaction in a smart contract, and record the output of, or the conclusion, the answer to the smart contract in the immutable DigiByte ledger. Okay, I know that sounds, for me, that sounds simple. That might be mind blowing, but that's freaking awesome. And that's literally what I just described right there is countless business applications, billions of dollars worth of profitable software, not just software, but actually services to support that software and jobs. And I just basically described in that one sentence an entire enterprise organization. Anyway. I'm considering investing in Curve. Okay, so Curve is not an investment. Curve is a vehicle. CRV. So Curve has done horribly price wise. So let's take a look at Curve. We're running out of time. I'm going to let it go over a couple minutes. I want to answer these questions. So I'm hot on Curve, ladies and gentlemen. Hot on Curve. So obviously the price of Curve has done horribly. So you don't want to own Curve. But what you want to consider, so Curve has actually stabilized a bit and has been performing extremely horizontal. So where's Curve? I have Curve up. So what you'll notice with Curve is if you go to use Curve at the top, you take CRV and you lock it for 4 years, you get one VECRV. So if you go to the Dow button at the top, and then you go over to the locker tab, you're able to lock CRV for, and say, whatever, 1,000, lock 1,000, which is probably about $500 right now. And I locked mine for 4 years, which gives me, I have a lot of VECRV, and that VECRV gives me the rights to trading fees. So all this stuff, you see all this volume, which sums to about $58 million today, 0.02% of that is a trading fee that gets directed to everybody that holds VECRV. I have a certain amount of VRCRV. I have this quantity of VECRV. And by trading fees, obviously this number is going to vary daily, and this number is going to vary daily. But I am getting 43 cents per VECRV based on today's calculations. That sounds like a damn dividend, boys and girls. Hello, REITs. Hello, Legacy Financial System. I'm out. Goodbye. I don't want anything to do with you. What I want is a piece of this. I want a piece of $58 million a day. And that's what I'm buying. I'm using Curve as an intermediary vehicle to acquire as much VECRV as I can, which gives me rights to a daily portion, a daily proportional portion of the transaction fees. So I get about $19 a day right now, and this number varies. Well, guess what? If this goes up to $500 million a day, that's going to be pretty cool. $190 a day, $60,000 a year, or what if it goes to $1 billion? Come on, guys, this is a duopoly. So bear in mind, that's the speculative part. There's your risk. There's your risk. If what I just described plays out, if this one, it's a duopoly, and you want to look at the confluence of why this may play out, and you want to consider your position sizing based on risk adjusted rewards. Now there's risk. Maybe this goes down, maybe crypto dies, and maybe I don't know, whatever. Maybe something horrible happens. Point being, this seems incredible, and I think it's going to go up. So there's my speculative bet that we're at $500 million a day, $1 billion a day, $5 billion a day, and I'm getting $800 a day in returns from my investment because the output, the VECRV, I'm going to sure as hell keep accumulating more VECRV as the yield I get in CRV accrues over time. That's the bottom line. That's the bottom line. The higher inflation rate, it doesn't matter. Because the what's pertinent is the share of VECRV that a person owns. This price point, in fact, the price point, as this goes down, you have more of a potential to acquire VECRV at a cheaper price. And what you're buying for that cheaper price is a greater proportional cut of the daily interest rate returns. So as the price goes down, it's giving smart money a better opportunity to acquire more VECRV. So it's please go down to a penny. I'll buy $1,000 worth. Buy $10,000 worth. That's the speculative bet anyway. But that's risk. And bear in mind, that is not a large portion of my portfolio, so that is a risk-adjusted return. I'm not taking too much risk. Everything that you saw there is all monopoly money that I made this year from thin air because Bancor, Kyber, and Synthetics, they all went freaking like 5,000% or whatever they did. So Jared says you can use any stablecoin. So that's the deal with the crypto cards. You could use any stablecoin. That's right. Yeah, but also it'll drive a CPA absolutely nuts, and you'll start seeing their heads spin around. Noah, what if you lock only Curve and Curve without the LP being other coins? If you here, look, if this is relative, this is a reason why it's in blue right here. If you lock $1 in Curve for 4 years, it'll give you one VECRV. It's equivalent to providing $132 as an LP. So if you lock $1,000 worth of CRV for VECRV, is equivalent to providing $132,000 to one of these pools as a liquidity provider. That is a relative way to assess the returns you get for CRV versus being a liquidity provider. That is incredibly lucrative. And people are so stuck on this. They're so stuck on this chart. Oh, what a tragedy. They don't, and it's unfortunate for so many people. They're not able to critically analyze these sophisticated projects because there's so much more to this project than the price of this asset. I don't give a crap about the price of this asset. What I care about is owning a proportional right to the trading fee revenue of the platform. A platform that is in a duopoly with Uniswap that has $1.5 billion in TVL, that is the 4x of the crypto space, and can potentially go 10 times on the volume in a relatively short period of time. Absolutely incredible. Absolutely incredible. Yes, that is very reasonable, Igor. Thanks, Noah. Appreciate it. Always a pleasure, Sam. All right, ladies and gentlemen, 12:08 p.m. Tuesday, October 13th. Best time of my day. Thank you so much for joining me. I will. Tomorrow's another day. I'll have another stream, and I look forward to talking to everyone tomorrow. As always, you have a wonderful day now. Peace.